Hey guys, this is Bruce Marshall from Simpler Trading with the nightly video update for June the 27th, and I've got the S&P up here on the screen today. We had a pretty crazy day, all over the place today. We came out of the gate this morning pretty strong. Right here, the futures were down overnight, but we came out of the gate pretty strong up to almost 2750. And at this point, I was thinking that we break through 2750 and we're kind of back to the races again. And then we really just kind of gave it back all day long, and even into the close back down here to 2700. Now again, this is S&P, so 2700 has been the level that we just keep revisiting, and hindsight's always 2020. We have been range bound between 2700 and 2800 for a little while. We had that spike down a couple of weeks ago to 2676, and then we rebounded really strong off that. And let me back out here a little bit more, but I guess the important thing is as we're looking at this. So here's a 5-day chart. We have come back down. It was 2 times today, and once on Monday. We had that big flush down Monday. So notice 2698, and all levels are calculated off of the ES. So this is right at 2700, and more in line with 2700 on the ES. But the SPX cash is sitting here on Monday at 2698. Today, we're at 2700. We actually came down there twice and closed there, and that's very important. And I know that you guys probably wonder why we spend so much time on the S&P, but the S&P is obviously the driver. The markets are correlated obviously with the NASDAQ and the Russell, but we want to see direction from the S&P 500, and right now the first thing I want to see is that 2700 level hold, and again, so far it has. So let's back out here to a little bit longer time frame, and we will go to a 20-day chart, and you will see, I talked about this in last week's video that I did. The low over here, right off the side over here on the left, was 2676, and we rallied 100 and something points off the low to come up and almost hit 2800. We didn't quite make it, came a little short, and I thought we would get some consolidation back down to 2750, and indeed we did. If you notice here, lower lows, lower highs, lower lows. It's just a stair-stepping pattern, very clear. Stair step up, touch the top, stair step down, 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 down. This red line here is the 200-day, and as you can see there, it's right under 2750. And I thought that level would hold, and it did. And we bounced here. We rolled over, and I thought it would hold, and it did, and we bounced. And then on Monday, we just sliced right through it and kept going all the way back down here to essentially 2700. And again, rally, and we're back down here. So that level needs to hold. That's number one. We need to hold that level, right? So let's go back out here on again a little bit larger time frame. You guys know I like to start at the daily level and work our way back out. Now there is a from a a larger time frame, we could absolutely come back down here and touch this 200-day moving average at 2667. We've already been there. There's no reason we can't. However, in the short term, today's Wednesday, tomorrow's Thursday, and after the close, the Fed is going to release the results of the bank stress tests, right? And if you didn't know, the financial sector makes up about 14–15% of the overall S&P 500. So the expectation is that the financials are going to pass the stress test with flying colors. They're all going to increase dividends and announce a bunch of big buybacks and things like that. So we could be at a real critical point here, right? Because we could see a turn in the financials to go higher, which in turn would help the S&P to kind of regain its footing and go higher from here. So whether we turn tomorrow after the close, whether we turn there, on Friday, or whether we come down and test this 200-day moving average, as you can see, we've held that line, that 200-day moving average, very, very powerful, strong point. You can see all the way back here from all of the craziness we had. There's the February low, and we hit it, bounce off, hit it, bounce off, hit it, bounce off, hit it, bounce off. Could we hit it here and bounce off? Absolutely. At some point, we get things going again and we retest some higher highs. We do have earnings coming up in about 3 weeks. We will get into the tech earnings, which, with Amazon and Google and Apple and all the NVIDIA and Broadcom and all those kind of guys, Palo Alto and so forth. There's no reason to think that those earnings aren't going to be good, and that will drive us higher as well. So the real critical question is, what happens in the short term. Long term, I think we all agree that we should go higher. And in the short term, if we go lower, or could we go lower? Yes, absolutely. Could we go dramatically lower? Not really, I don't think. Outside of North Korea doing something crazy, or the trade tariff concerns getting out of hand and continuing to weigh on the market and really dragging us down. So that possibility is always out there, but again, in general, I'm still continuing to look to the upside, and what we've had from this high right here has been pretty normal consolidation, retracement, nothing out of the ordinary, nothing to go and go get crazy short on, because this could be when it turns, it could be a very sharp rally to the upside when that happens. And again, the next thing I'm looking for would technically be after the market tomorrow on Thursday with the stress test results, and then on Friday to see how the market reacts to those numbers. So I continue to want to trade this thing very carefully, very cautiously bullish, trading smaller size, but again trying to pick up some bargains down here while we were in the lower end, and with an eye to the upside. And I would be looking at, I like the financials, the JP Morgan, Citigroup, for example, are my two favorite picks there. Want to buy some Amazon here if I can. ISRG on any kind of weakness would be nice. Caterpillar, Boeing, for example. Excuse me, good names to look at and look for to buy them cheaper. And again, I don't have anything specifically other than to say keep your short list on your desk near your computer, and buy, even if you leg in, buy a partial position here and kind of get started to get some exposure to the upside going forward. So I hope this helps, makes sense, and be on your toes and watch for what we do on Friday. So thanks a lot, guys. I appreciate the time, and I will talk to you at the next update.